And ladies and gentlemen, our next speaker heads one of India's leading asset management companies. His perspective on market valuation, sectoral opportunities and also opportunities for investors will be valuable.
Please welcome with a round of loud applause, Mr. A. Balasubramanian, the MD and CEO of Aditya Birla Sun Life Mutual Fund. He'll be in conversation with Aisha Faridi on markets and money, India's capital momentum story.
So we're here to talk about markets and money, and who better than A. Balasubramanian himself to talk about that. Bala, your smile and the person who has gold in their lockers smile. Similar. Best returns
but
this
I don't
year.
know how much gold with me, but all my investments are in equity and I've just given a higher power of compounding. We always believe any investment we make should be able to create economic value. So all of us, in fact, while we are bullish on gold for certain reasons, we are also not equally bullish on gold because it has got only storage value. I think if you go back and listen to all the yarns would have come from the traditional portfolio manager, including Warren Buffett, they would have said gold is not the right place to invest your money. Because of it does not have the, except the storage value, it does not have the economic value that it can generate. We all believe in invest in companies, invest in businesses that generate profit. That creates shareholders value over a period of time. Therefore, the money multiplier effect comes in. Therefore, you create wealth. And of course, this time has been quite different. The demand supply is more in favor of gold and silver, thanks to the dollar ownership and sovereign funds buying. So it's completely seen a different thing. Definitely from India point of view, which is like there are two things I see as a journey for India. High population of India we used to see as a liability. Today, high population of India is actually an asset. And if you also look at the debate and discussion used to be there, India's household saving is more in gold and less in financial assets. And the more in gold today is coming in handy. The wealth effect, we can say per capita income or per capita net worth, how people, if you say add the gold as an asset class, of course now it's become probably more richer. Therefore, that asset class is not added. On top of it, if you also add the assets, that's lying, of course, I presume one day the well-debated Padmanabha Swami temple will also open up for giving the gold to the state per se. Then we do not know how much of the gold reserves will come from there. Therefore, just because the gold price is rising, India, on the contrary, has become more richer.
Yes, it has. In fact, before I chat with you, I really want to ask this audience. I'm sure everyone has gold, but how many of you actually invest in mutual funds? How many of you are SIP holders? Okay, we need to really strongly pitch to this section of the audience.
They also must be having it, but they are not raising their hand.
Okay. But, I was just going through some of the stats. The fact that the mutual fund industry started in 1964, but the parabolic move came with financialization of assets, post-demonetization, post-digital currency getting a fillip. In the last 5 years, Bala, what's been your experience on how India has actually accepted mutual fund? And you were at the helm of the mutual fund Sahi Hai concept, which is now a narrative across homes in India.
Yes. So I think some of our attempt, there was a period where we were worried about, not worried, but we were still wondering how mutual fund become as part and parcel of everyone's investment radar. Forget about investing. It should come in the investment radar. It should be part of the consideration. The way we coined mutual fund Sahi Hai, which is in the year 2016, when I was the chairman of AMFI, we said this has to become part of the conversation in everyone's coffee table. If you are sitting in the family, it must be part of your discussion. If you are having a chai with somebody in the marketplace, it must be part of the discussion. Therefore, it was intended to actually create that kind of concept. And we never imagined this will become so large. And second is the bigger trend came, which is the demand. Which is the moment demand came, then naturally you start thinking about what are the investment options that you have in front of you other than holding in cash. So you start debating about cash is still supposed to be investment for a variety of other reasons. So how do you move from cash actually to the other financial saving? Therefore, the mutual fund caught up during the period. But now in the last 4 or 5 years, those who have done SIPs, I think they are about seeing the experience. And they are seeing the experience in terms of the investment return better than any other investment that they would have done. Therefore, now it's become a way of investing. And now SIP become a way of investing, which is a new trend that has definitely has come in. And other reason is India generally is considered as a country which is a high interest rate regime. So we used to live, personally have seen, being part of the MF industries, we have seen interest rate being at 28%, is as low as about 4.5%, and now is about now back to about 6.5%. I think consistent is the last 5-6 years, whether it is a monetary policy authority, the Reserve Bank of India, or even under the Parliament Act, setting a target that should be the inflation target that we should have. All these things have led to a prolonged period of low interest rate regime. If the interest rate regime it remains a prolonged period at low interest rate, single digit, is the middle of single digit, then naturally you start looking at alternates. That is where I think mutual fund position themselves very nicely in the last 4 or 5 years period. And again, of course, corporate earnings has been the biggest supporter when the market does well. Therefore, it is a good problem to have. And now you have seen in terms of SIPs coming in, it is a new trend that has come. I think even HNI investors who are predominantly willing to take a call on the market, even they themselves have now realized it's not worth taking a call as long as it's going to remain invested in the market for long. Better to take the route of SIP. This has now become, whenever I travel overseas, one obvious question is to come from foreign institutional investors, when will this SIP stop? And the question is to come from a level of 8,000 crores per month. Today is now come to 29,000 crores. The second, I think the trend that you are also seeing is the bank deposits versus the mutual fund size. In US is almost about mutual fund size actually as big as the banking industry size in US. Whereas India we used to be about 14%. Today it's gone about 35%. Now the predictions are coming, it will become about 50% of the bank industry size, the mutual fund industry size. So this is something which I think, one, formalization economy, definitely I think has improved the confidence. Second, as you rightly mentioned, democratizing investing and taking it to the every nook and corner of the country is now become a second trend change that I'm saying. And third is of course the TINA factor. I mean there is no alternate to other asset classes. Also benefiting mutual fund industry to get more and more flows. And lastly, of course, because of the power of money coming in, Indian market behavior is far superior to the rest of the global market because the volatility has been the least. The lesser the volatility, higher the predictability, the naturally your ability to put more money in the market also increases, the confidence increases. I think we are in that path, I would say.
Yeah.
In fact, I must also mention there was a worried statement which came from one of the Mercedes, the CEO of the factory.
Yes, of course. Santosh Nair.
And then he
Yes.
said people are not buying Mercedes because most of the people are shifting their investments to the SIPs. And then we took this as an opportunity and then said more the people do SIP, they'll have
The
more
more
money
they
to
can
invest.
afford money.
Mercedes, you must go and market it.
Yeah.
The more you do SIPs, therefore instead of buying one Mercedes car, you can buy multiple Mercedes cars. So actually it turned out to be a good marketing slogan for all of us. Indirect visibility also we got around a period of time.
You should tie up with Mercedes actually.
In fact, I met the gentleman very recently in Pune,
Yeah.
and we both of us discussing on this. The very same day when he did the statement, I did call up and have a word with him saying, why did you make this statement?
Then what
And
did he
looking,
say?
then he said, Bala, I just casually made this statement with no specific intention of hitting you guys, but it turned out to be so good for you and us, and both of us grown in life. SIPs have grown on one side, even Mercedes car sales also in India has gone up like crazy.
So on that note, I was just thinking about the past 2 days at the India Economic Conclave and the fact that, the subject that we've chosen this time is navigating geoeconomics. And I was just thinking through it that if there is one industry here in India which has actually managed to navigate everything, that's the retail investor, that's the mutual fund investor. 2,000 crore rupees worth of money coming in into SIPs daily. That's the number that we're talking about, and I still believe that we're just scratching the surface. There's so much more to go. Would you say that the real winner has been the SIP guy?
Yeah, of course. See, in any economy, you need to have vibrant financial market. You need to have vibrant capital market. It's not about mutual fund alone. The whole financial ecosystem should become so strong. At the end of the day, money being the raw material for every business needs. And the financialization of that mutual fund that has come, democratization mutual fund that has come in the country, most of the investors, the participation in the equity market, definitely you participate indirectly in India growth story. I think India growth story is not restricted to only certain segment of the people, certain segment of the savers, certain segment of the industries. It's actually it has to get percolated to the every citizen of the country. That's something I take pride that mutual fund industry actually delivering their aspirations. Second is, when we used to actually build the business in the 90s, we never used to go beyond Mumbai and Delhi. We always thought that mutual fund means it has to be only Mumbai and top 8 cities. In fact, today, the mutual fund has presence in almost about all cities by way of pin code, at least some form or other, which again taking the Indian equity capital market to the every citizen of the country, which is actually is helping them participate in the India growth story, which is very good. And finally, when we come to the question of capital market development, most of the companies in India used to depend on debt borrowing. So you go to the banks, you actually borrow, your entire projects can be funded through the debt borrowing. And equity issuance for your business growth never used to be the case in the past because money are not available. Because the financial system of savings coming to the mutual fund, today money is also equally available, rather more money is available for equity funding, which has never been the case in the past. Every business person has to break his head how to actually fund my growth to build my business next level. In fact, the India aspiration of becoming 2047 third largest economy, I think that will become reality because today funding is available within India even for equity needs. Startup companies are getting funded by Indians. Otherwise, we should depend on overseas investors. So this, in my view, is a bigger achievement that has come thanks to the mutual fund industry. But having said this, we must also give credit for other financial savings coming into the capital market through the NPS. Today, NPS has become the largest size. Next to mutual fund, if you take the second largest industry is NPS. And within the NPS, they have a category which invests in equity up to 50%. They have a category which invests in up to 28%. They have a category which doesn't invest in equity at all, which essentially means your long-term pension planning can be done through the NPS. So that pie is also growing. Because people have actually understood I should not only protect my wealth, I should also, of course, build for my future needs. Therefore, this actually greater awareness that has come, definitely I think is a good change in the Indian capital market history. I think this is going to only stay for longer and it can only do good for companies to fulfill their aspiration through good mix of equity funding as well as debt funding.
But Bala, at the helm of your mutual fund, we've had to navigate so much geoeconomics and so much geopolitics as well, pretty much on a daily basis. At least our lives begin with one man's tweets every morning and how markets will react to that across the world. How did you navigate through all of calendar 2025?
See, I think the geopolitical risk, in fact, it again, historically, it used to always part of our last slide. What are the risks that we see in every investment? That's why we actually finally will sum it up, various risks associated to whatever assumption we make. I think geopolitical risk has now become a new normal in the sense that I think the last few years, the way the global economy has gone through a geopolitical risk, despite that, the whole disconnect or maybe got segregated between the geopolitical risk and then the economy. I think these two seem to have got segregated very beautifully. Therefore, this I think is risk will remain. But definitely from India point of view, the energy prices coming down as a result of that is something has benefited big time. And then every country after the tariff or even post Russia, Ukraine war, I think every country started looking at inward and making it for yourself. In fact, I think India probably would have got saved because we started visualizing making it for India and then for the rest of the global. All such things which came from our Honorable Prime Minister when he got elected to the government in 2014, all such things actually brought inward getting worried about some of the geopolitical risk and again segregated. Also been kind and therefore some of us success we can't
Bala, I would also credit that to the mutual fund industry. I would us. But at the same time, Bala, you know, while we rejoice in the fact that the Nifty around 40-50%, the mid and small caps have just not fired at all. The index But why do you think such a disconnect has happened?
So I think in every market, there are good period, you see the broader market performing better. And when the economy actually is going faster, the economy also perform. Companies can only grow as growth, they can grow. Make an assumption, those growth also may go through some bit of period of volatility. I think what you have seen the last 1 year, small and mid cap, any exuberance that happened, the market is actually is always it curates themselves on its own. We don't need to do anything. We don't need to even think about the policy. It curates on its own, makes a course correction by themselves, and then by way of somebody's losses, somebody's gain. That's the way it happens. I think the current expectation that is there as far as the small and mid cap concern, what you mentioned about last 1 year negative return, if you look at 7-year period, I think it's far superior to Sensex companies. If you take a 10-year period, far superior to the Sensex or Nifty. Therefore, as you go down the market cap, your time period that you have to give for companies to perform should be longer than some of the established companies. So that's the way market always behaves. But having said that, the market breadth and width, I have one number which is about, if you take about 10 years back, the representation of the large cap companies coming from Nifty 50, the overall composition of the market cap used to be somewhere around 70%. And today, the composition of the Nifty 50 companies and the overall composition of the component of the market cap is just about 62% today. That means where is the market cap has gone? Rest of the market cap has gone to the other than Nifty 50 companies, or maybe other than Sensex 30 company, which essentially means breadth and the width in the market has gone up. The number of companies who come to the capital market and raise capital completely fresh in the business. Number of companies who come and raise capital market money is about close to about 7 lakh crores. And they were never in the business, say 5 years back. They were never in the business about 10 years back. These are new companies, new age companies. They have discovered themselves a great business model that they exist, whether it is in the technology space, whether it is in the quick commerce space, whether it is in the financial services space. There are many companies using technology that discovered themselves. They have created a new market cap. So as a result of that, the number of companies that are added to the overall market cap also come new in the last only about 5-6 years. The last, of course, the list is the public sector companies. They always used to be the underdogs in the market. They used to have big companies. They can move up the economy, but they never used to get the recognition for a variety of reasons, including the inefficiency of capital usages. Maybe inefficiency of how the business are being taken to build the business. In fact, the last 5 years, the public sector companies, I always say the government of India has become more richer because of ownership that they have in most of the public sector companies. It not only become efficient, they also now become the driver of the economic growth and participate in the 2047 vision that government of India is
Promoters are always rich.
all the promoters are rich.
Promoters.
One of the promoters is, of course, government of India. President of India has become more richer. And why I specifically mention this? As an economy, we always used to have a fiscal deficit, always used to have twin deficit. One of the suggestions as a fund manager and economist used to give is the best way to actually fulfill your deficit by way of selling your sovereign wealth. Basically, divest your companies, let them be called privatized, and government runs only the policies and run the government and not run the companies. This suggestion used to be there. In fact, in the last 5 years, the divestments have come down, but they have actually created more wealth, not only for the government, they could also participate in the India growth story. Therefore, they have created a market cap for themselves. This is actually the way the market has shaped up in the last few years. But definitely, I think whenever you see a big bull market, whenever we get a return in excess of say 15-20%, it's easy to you can easily make an assumptions. It has to go through a period of consolidation, as it happens in every company. Of course, we can give many reasons. We become complacent or we can't grow the same rate of growth. Some excuses will come. Therefore, it actually follows its own correction mode. I think what we are seeing in a small and mid cap is actually is of that nature. I don't think it's as a class is bad. It's a question of the time period that you have to give for every company to perform. That varies depending upon what size of the company is.
Understood. But Bala, the only worry, or it possibly could be a worry, is that the new class of investors has come since the COVID lows. They've not seen a bad patch in equity markets. They're still sitting on 5x minimum returns across portfolio, mid, small caps, large caps, individual stocks, much higher than that. While right now, this year, they've done okay. They've been very patient with their SIPs and they've, had that discipline. Do you worry that if foreigners continue to sell India, at some point that patience will sort of relent itself? If mid and small caps do not make a comeback, then what happens to SIPs?
So I think the small and mid cap not coming back question doesn't arise for one simple reason. So I think you mentioned about COVID. The bigger discovery for India post-COVID, how policymakers can make interest rates available cheaper for small size companies. The interest rate that was being charged for small companies from the banking industry is to be in the double digit, middle of double digit. So anything less than 13% you will not get money from access to the funding from banks. Post-COVID, thanks to one decision which was taken by the government, 10% of the capital will be guaranteed by Government of India. Therefore, they forced all the banks to lend money to the needy MSMEs and SMEs. That changed the whole culture. You got to experience the wrong notion that maybe the Indian banking financial would have had, that the SMEs means is bad, not touchable, they could become potential defaulter. Because the servicing was so good, and most of the banks actually could step up their engagement with the SMEs and MSMEs and start giving money at about 8.5%, 9%. Today, the cost of capital, whether it is large companies or small companies, more or less the same. The cost of capital. This is actually new change that I think has been helping the SME companies to fulfill their ambition because the cost of capital has come down. Therefore, this is not going to change. It's not going to reverse. Therefore, this segment, I think, maybe will remain. As far as the foreign investors concerns, we must also admit they have been there in India since 1992. I remember very few foreign investors used to come in India in 1992. They continue to remain. They have been a long-term investors. They have made tons of money in India, as against what they would have probably made in China and other markets. China has done very well in the last 2 years. Whereas they have gone through a period of almost 7-8 years of underperformance, big time. A lot of uncertainty in Chinese economy. You take Japan, 20 years of fall. Only in the last 2 years they have done very well. Japan has suffered for 20 years. A lot of people have made investments in Japan but not going anywhere. If you take US, the traditional fund managers are not making money because they still don't believe FANG stocks can be owned by a portfolio manager. Therefore, they are all owning the traditional companies, less of ownership in FANG stocks, which is the Facebook and Alphabet kind of things. They are traditional money managers who have never taken a bet on those kind of change in trend. Therefore, they remain underperformer. Only the area where they can take money out, where you can make money. They have made money. So that's one I am saying. Second is FDI investment. I think today if you look at the FI outflow, 40% of the FI outflows, foreign outflows, is coming from foreign institutional portfolio managers. 60% of the money flow outflow is coming from FDI investors. All the FDI investors have come into India in the last, say, many number of years. Now suddenly they are saying the value that they are deriving in India is far higher than the value that is being assumed wherever they are sitting, whether it is Korea or Japan or US. They assume this is my valuation. Suddenly they see that, oh, India is giving multiplier 2 times of multiplier which I am getting in US, rather than let me encash. Like recent example of LG. They don't need money for the investment. They are all cash-rich companies. They can continue to pour money. They have abundant cash supply that is there. They can access international capital market at much ease. And today, they have sold in India. Whirlpool. So they have a debt that they have built up in US market. Therefore, suddenly, how do you actually come out of the debt in US? By selling India stakes. So we are seeing such kind of trend change that we are saying. Therefore, the selling, what is happening is for different reasons. They have made money. At the same time, they are seeing money being made in India. Therefore, they are getting out. With the rupee dollar being about 91, 92, my own gut feeling is there is high probability, and FI is also extremely smart. They always go wherever their money can be seen in terms of to be made the next few years, and probably they will take a reverse call on India. Rupee dollar being about 91, and economic growth is not coming back, with the GDP recent coming back, with the outlook for companies' earnings to get better, and cost of capital continues to remain very low in India. Therefore, the high probability the FIs will turn out to be a buyer. If not now, maybe in the next 6 months or so.
I have to talk about India Inc. earnings as well, because from the last year, when you saw the market fall and then consolidate, a lot of it was also got to do with earnings getting peaked out. And we saw a dry patch of 2 quarters when India Inc. earnings were not at par with expectations, and therefore the market, sort of found its feet and corrected. Do you think that's now behind us? And can from the Jan quarter we finally see upgrades coming in at a more broader level?
Yeah, sure. See, one of the things that we must take note, the fall in the market did not come on its own. It was orchestrated by regulator. It was created by Reserve Bank of India and saying India has been growing faster than what we expect. The loan growth has been much faster than what we expect. Therefore, this needs some bit of speed breaker. They actually put a speed breaker by way of controlling the rate of growth in lending. And they also felt that the rate of growth that is coming in the lending market actually leading to the capital market by way of speculating. I think both SEBI and Reserve Bank of India, they may or may not say it in public domain, but they took certain actions that were more in the form of a speed breaker. Yeah. With rising equity market, as a country, we can't afford to have any accident, especially at a time when we're aiming for big momentum for the future. Therefore, that's something that I would say orchestrated. And that has played out quite well. Now they're also taking, of course, reverse of what they were supposed to do in order to drive the growth momentum back. Therefore, this is something, my own belief is one should keep in mind. But these are something need to be done as the economy, as a country, as a regulator, as a policy makers. They do pay attention, both the sides. Support when it is needed. Also put a speed breaker when it is also equally needed when we actually drive faster than our own potential. Then we must try to put a speed breaker. And this being the case, therefore, resilience on India is far higher than some of the other global economy because of this reason.
But Bala, when you look at today's world, there's AI, which is the thing. There is obviously to navigate geoeconomics, your defense has to be strong. Can I correlate that to Indian sectors and stocks? And can one still invest in these sectors and still make money? Because defense at some points does look very rich in valuations.
I think from, one good thing is the change in the technology space. Generally, Indian companies are quick to adopt the change. So we may ignore initial period, but we may not ignore it for too long period. Therefore, every company today is bringing in technology as part of our core strategy, whether it is using AI or machine learning, bringing it as part of the service requirement that they can build from a customer. Whether it is automobile companies, huge investment they are making in terms of automations using technology, bringing in customer connects using AI and so on and so forth. That's something the investment they are making. That's something historical traditional companies with the core product being there, and they're actually ring fencing the risk by way of making them equally capable using technology. That's something I see as a big change. Second, of course, traditional IT companies who are predominantly brick and mortar kind of model, they themselves, of course, rediscovering themselves in terms of what role they can play in the new AI world. Therefore, looking at the whole business model, by looking at the cost, looking at the areas they have to bring in expertise by way of skill development, and that something is coming. I think fortunately Indian companies, none of them actually get into the froth as we have seen in the global market. Recent, of course, US market has completely gone berserk on the AI and OpenAI. Valuations have gone through the roof, and we do not know how the payoff will come. And one of the things that is being talked about when we talk about India capital investment is the real assets. So when we say Government of India talks about capital expenditure, is real assets, building roads and metros and other physical assets. When companies in India, companies, whether it is Mahindra, Birlas, or Tatas, or Ambanis, or Adanis, and they talk about assets, they're getting real assets. Whereas the technology assets can be supposed to be part of the investment. Whereas the US talks about capital investment rising, is the AI investment. How much of that can actually play out in the global market in terms of return on equity, return on investment? How much will come, that still remains to be seen. So therefore, this something is too early to take that call. At the same time, can we ignore the change, the trend, what is happening in the global market? Cannot be ignored. That's why I think Indian companies are also preparing ourselves for being part of that technology advancement should become part of the business itself. Therefore, my own belief is most of the sectors in India are actually using technology as part of the next round of strategic thinking, which itself will ensure that we protect our downside. At the same time, we are able to participate in the upside as and when it comes.
So you're saying bet on AI users as opposed to being obsessed with the guys who are inventing AI as we speak, which is the Fab 7 companies in the US.
Exactly. I think we have been a quick adopter, and I probably assume India will be able to adopt much better than the past, given the fact that our earning curve has also been quite strong and sharper.
Bala, what are sectors that you must own in your portfolio right now? And I asked you about defense as well. I mean, I know the best may be behind us, but should it somewhere be part of your core portfolio?
I think sectors can vary. I think it's difficult to take a call on sectors, and given the fact that if you divide the Nifty, the larger component of representation in Nifty comes from financial sectors, which I think will remain the proxy of the Indian economy, continue to grow at maybe 1.5 times of the GDP growth. That will remain. The next comes is your IT, then comes is the auto, then comes actually the pharma, and then comes in the other sundry sectors, including energy sectors also comes. So these sectors will remain as the core sectors. But whether these sectors will be able to generate significant alpha in your portfolio, or not necessarily, because the market breadth is also widening. The best way to play from investors' point of view, this is what we keep saying, because given the fact the sector rotation happens very fast, and that something cannot be predicted by just sticking to one portfolio, so better to always take the diversified portfolio, such as flexi cap kind of thing. It serves the purpose of not restricting yourself from only one segment of the market, one market cap of the market, and investing across different pocket. That's something is, I think, becoming an asset class to look at it from investors' point of view. The second asset class, which again got discovered in the mutual fund space, is called multi-asset class fund. There are two questions comes from people: should I invest in gold? Should I invest in silver? Should I invest in mid cap? Or should I invest in large cap? The common question comes. So, what is the solution for this common question, which is a multi-asset class fund, which invest in across different asset classes? Now, REIT and InvIT also now has come. And the third question, of course, is the when do I sell in the market? When do I buy in the market? This is again common question for everybody. Everyone wants to time the market. They don't have time to time the market. They don't have time. Everybody is busy in their own world. But still they want to worry about the timing in the market. In order to remove the pain points of these kind of customers' questions, a mutual fund have discovered balanced advantage fund, wherein you apply certain principles of market trend, and basically you try and predict where the market trend could go, and accordingly move your allocations to equity up and down depending upon where the market outlook is, which is a dynamically managed portfolio with a lot of agility. That something comes to the balanced advantage fund. Therefore, mutual fund now becoming a vehicle to participate in a multiple ways and answer your question that you may have in your mind by choosing this kind of product. But why I'm specifically again insisting on this, if you look at sector-wise, it goes through such a long period of gestation period, sometimes it can create a frustration among people when you choose certain sector. This is a sector only which I can take a bet. So that's why I think the diversification actually would actually serve the larger purpose, unless until you are a money manager, you have a lot of time on the earth and able to spend your time, then definitely you can focus on sectors. But otherwise, once you leave it to a diversified portfolio to serve the purpose for which you are making the investment.
Like Buffett said, it's not about timing the market, but time in the market. So
Exactly.
stay steady, stay disciplined, and you will be richer.
Correct.
And buy how many Mercedes in next 10 years?
I'm sure it can go up by 3-4 times.
Okay. 3-4 Mercedes. Okay then.
So I think the power of compounding,
Yeah.
it actually comes in. See, often we discuss in the financial services, you have multiple set of people, right? There is a provider of capital, there is a arranger of capital, and like I just take the example of investment banking. There was a period, a lot of people would have felt, is the investment banking is a profession in which I should be there or not? And today, they don't have time to breathe.
Yeah.
They are completely having a free, it's a good time. Maybe they're all having a Sukradasa for them, and therefore now they are minting a lot of money. This is a period. The number of companies that is coming in, for a money manager point of view, it's not about how many companies I'm investing today. So it's about how many companies I'm actually rejecting it.
Rejecting, yeah.
So there are certain companies. I think now the ratio is changing. There is a period where there is shortage of supply. There is so much of supply is coming that you must also choose what to invest, where to invest in order to select the companies, which is a new problem to have, which in my view, it's a good problem to have, which will take the economy to the next level of growth. If the capital market does well, money is available for everybody's aspiration to be fulfilled, I'm sure the economy will do well. It will also make the government job easy to do their job better. As yesterday Nitin Gadkari was mentioning that how they are building it up, then whole ecosystem can benefit out of that.
And also capital market stocks have done so well.
Exactly.
So structurally, that should be part of one's core portfolio. I mean, obviously, it's also about what price you pay to buy these stocks. But AMCs, mutual funds, exchanges, do you think they should all be a bouquet of stocks in your core portfolio?
Yeah, it does, of course. We must only keep in mind this sector will always remain volatile because earnings are linked to the asset growth, earnings are linked to the market momentum, earnings are linked to the buyer's behavior as it happens in traditional businesses. Therefore, that one should keep in mind. The market generally have the tendency to give higher pricing when too much of exuberance is there. The market also has got tendency to punish them when the exuberance gets completely dissipated. Therefore, we must just keep in mind, as long as one is able to stomach the volatility, definitely the capital market sector is not a bad sector to be in. Second is the wealth effect in India is rising. I think is one of the area where I discovered the wealth effect has gone up quite significantly. Wherever there is a significant investment is being made, leave aside metros, leave aside road constructions, the spiritual tourism, wherever of course gone up significantly, the business opportunities have gone up quite significantly. I know some of the family offices have built the businesses, identified locations in and around the spiritual locations, and they are building their own hotel chain. This is like in the early days when the road construction used to happen, motels became the biggest business model. And I'm sure most of us will remember India motel was a new industry. We used to call them motel, we never used to call them a hotel, we used to call them motel, which is wherever road construction happening, the motels will come, that become a big business opportunity. In my way today, every spiritual location, wherever the huge traffic is coming, that become actually business hub in multiple ways, which again increase the wealth in these locations where the people are living in this place for many number of years. Doesn't need to go look beyond their own cities because they can make their living more comfortably, living in the same place and enjoying the wealth. And that wealth effect is the one which I think will drive the next round of economic growth by increase the per capita income going up quite significantly, therefore boosting the consumption. I think it's got a multiple effect.
So Bala, I've prepared a rapid fire for you and we can have filter coffee after this. And there's only you, so you will win it in any case. India invests more via SIPs every day than many countries do in a year. True or false?
True.
True? First mutual fund in India?
Unit 64?
Yes. Okay. 500 rupees a month can make you a long-term investor.
Definitely. Power of compounding will play a big role.
Power of compounding, the eighth wonder of the world. Biggest owner of Indian equities today, is it FPIs or mutual funds?
I would say Government of India.
Government of India. Mutual fund sahi hai. Slogan or movement to live by?
It is a wave.
It's a wave.
Complete new wave.
Complete new wave.
Others are trying to replicate it, they are still not successful.
Yes. Metros or small towns? Who's driving new investors?
Metros.
Metros still are.
I mean, metros this is not restricting to almost about top 40-50 cities I am taking. Because metros definition is not only Mumbai. Even headquarter of districts also comes in the metro. Therefore, that pie is very large. Almost about 100 cities would drive that.
Nifty level by 2026, December.
So I must, of course, give you some kind of rider. We have never been right in the past predicting index. Therefore, whatever we predict even today may not necessarily come true.
Of course.
But still, we cannot rule out 1 lakh index coming in very soon.
Very soon is how soon?
Next 1 year.
Next 1 year Nifty?
Nifty.
1 lakh?
Sensex.
Sensex.
Sorry.
Okay.
Sensex.
Sensex.
But I must give with the rider that we never been right in the past by predicting these kind of numbers.
I got goosebumps, Bala. I was saying Nifty, we're at 25,000 right now. 2 filter coffees for you.
Thank you.
From your lips to God's ears. But anyway, the one sector that you think will drive Sensex to 1 lakh?
It's difficult. I think my belief is it will be largely driven by IT. followed by banking and financial sectors.
IT?
Yeah.
Really?
It is.
I have to ask you why. Because it's bottom up, or do you think
5 years of
the rupee
underperformance.
weakness will also have a big tailwind effect?
5 years of underperformance and valuations are cheap. It's a pure contra bet. They still have about 14% of index. And the new discovery, once the trade thing is settled down and the new investment that will go in technology, I think that one, it can unlock value. Second, of course, financial sectors continues to remain the large drivers of Sensex. Plus, there is an index change also coming in where the financial services index is actually now getting moderated. Therefore, you'll find companies which were not able to get participation as they deserve. There's high probability they will get picked up as the weight changes in the MSA index very soon.
Okay, Bala, thank you for your time. And along with FlexiCap Fund, maybe one should do an index IT fund as well. Start the SIP today.
Probably, yes.
Thank you so
Thank
much.
you,
Lovely
thank you,
sharing
thank
with you.
Thanks.